Suppose there are two partners, A and B, and they are sharing profits and losses in the ratio of 3:2. And this is the balance sheet of A and B as on 31st March 2010. Liability side, A's capital 30,000, B's capital 30,000, reserve fund 10,000 rupees, creditors rupees 10,000, total 80,000. Asset side, building 40,000, cash 15,000, profit and loss count 5,000, furniture 20,000 rupees, and the total 80,000 rupees. C comes as a new partner for 1/4 share. He comes and brings rupees 20,000 as capital and 5,000 rupees as goodwill. And it was decided to appreciate building by 20% and depreciate furniture by 10%. Half of the goodwill was withdrawn. So this is the question. And the additional thing in this question is that half of the goodwill was withdrawn. What it means? The goodwill money brought by C was rupees 5,000 and half of the goodwill money was withdrawn means 2,500 was taken by A and B. Means this is the drawings by A and B, total rupees 2,500. This is the only additional thing. So, first of all, we set the ratios. Old ratio 3:2. It has been given in the question. And the question is silent regarding other things. It means old ratio and sacrificing ratio is the same. So, sacrificing ratio will be 3:2. And the new ratio will be the difference between 1 and 4. That is the share of C. And the difference between 1 and 4 is 3. So, 3 multiplied by 3. 9, 3 multiplied by 2, 6, and the total of 3 and 2 is 5, 5 multiplied by 1, that is 5. So the new ratio will be 9:6:5. So first of all, distribute all the accumulated profits. Is there any accumulated profit on liability side? Yes, reserve fund 10,000. So the general entry will be reserve fund account debit rupees 10,000 to A's capital to B's capital. That will be 6,000 and 4,000. Now distribute all the accumulated losses. Look at the asset side. Is there any accumulated loss? Yes. Profit and loss count 5,000. So the general entry will be A's capital account debit, B's capital account debit to profit and loss count. It will be distributed in the old ratio, that is 3:2. So the amounts will be 3,000 rupees, 2,000 rupees and 5,000 rupees. Now the journal entries of revaluation count. There are only two transactions of revaluation. Number one, the building has been appreciated by 20%. So 20% of 40,000 will be 8,000 rupees. So the general entry will be building account debit to revaluation account rupees 8,000. Then the furniture has been depreciated by 10%. 10% of 20,000 is 2,000 rupees. It's a loss. So the general entry will be revaluation account debit to furniture account rupees 2,000. Now leave the space for one journal entry, because at this moment we don't know what is the net profit or loss on account of revaluation. We can find out this loss or profit only when we prepare the revaluation account. Now C comes as a new partner and he brings 25,000 rupees. So the journal entry will be cash account debit to C's capital account rupees 25,000 rupees. Out of this 25,000, 5,000 is for goodwill. Goodwill money is brought by new partner to compensate the sacrifice of old partners. So the adjustment entry for goodwill will be C's capital account debit to A's capital to B's capital. And this adjustment entry for goodwill is always passed in sacrificing ratio. In this question, the sacrificing ratio is 3:2. So the amounts will be 5,000, 3,000 and 2,000. One more additional information has been given in this question, that half of the goodwill money was withdrawn. Naturally, this amount has gone to the old partners. So it means the old partners are going to withdraw cash from the firm. It's a transaction of drawings. And what is the journal entry of drawings? That will be A's capital account debit, B's capital account debit to cash account. So how much money they have taken? Half of the goodwill. A has got 3,000. It means A has withdrawn rupees 1,500. So A's capital account debit 1,500. In the same way, B has got rupees 2,000 as goodwill and he is going to withdraw half amount. It means 1,000 rupees. So B's capital account debit 1,000 rupees. To cash 2,500. So this will be the journal entry of drawings. So now all journal entries are finished.